All right, everyone. Welcome once again to the Faces of Business. And oh my, am I excited for our guest today. It's not like Andrew and I don't get to see each other enough on a daily basis, but it is fun to talk about what we talk about. And we are very passionate about what we get to do because we're going to be talking about the keys preparing a business for sale. Andrew, how are things going today?
Doing well, thank you.
Yeah.
Oh man.
Other than you're the weather's trying to
Well,
take you down, but you're fighting
excuse
it
the
back.
excuse the scratchy throat, but we just dropped 30 degrees and I'm starting to feel it a little bit. But fall is here. It's awesome.
Yeah. Yeah. It's good because that's closer to winter for you there in the ski.
In Park City, Utah. Yeah.
Yeah. That's what you want there.
Yeah.
So today I thought it'd be interesting for us to spend a few moments. We get to talk to a lot of people about selling businesses, preparing, growing value, and growing by acquisitions. A lot of other things that we get to do and helping clients do and talking to people about. And I thought it'd be fun to talk to you a little bit today about some of the things that you see that would help business owners prepare for a business sale.
Sure.
Yeah.
This is we learn this from experience by going in to help someone sell a business and finding out what's stopping us from selling this business. So yeah,
Mm-hmm.
the trial by error, but there's the keys to getting your business ready for sale. So
Yeah. There's some basics though, I think. And so first of all, Andrew, I got a few questions for you. I said, so what made you want to get into selling businesses?
wow. Yeah, I actually went to purchase a business myself. And this was after I worked in manufacturing for a number of years and worked on a job and wanted to become an entrepreneur. And I ventured out to go and buy a business and was surprised. I learned a lot going through that process, surprised how long it took and how difficult it was to go and buy a business. And I failed at it. I did not get the business sold. I had a deal very, very close to the end. And after about a year and a few $100,000 in diligence costs and all the other stuff, the deal fell through. And then now what the heck am I going to do?
Yeah.
It was time to start getting a job, go back and get a job, which is not, I couldn't abide with that. So I had networked a lot with other brokers and M&A folks in the search of my own business. And with the background I had, I was approached by a couple of good veteran agencies that wanted to see if I wanted to get in the deal business. And I did. So I did. I didn't go work for anybody, but I started my own shop, and that's where Exit Your Way started, sort of from.
Mm-hmm. So what do you enjoy about selling businesses?
Yeah, I mean that part was not difficult. I mean, I went to a broker conference for deal guys, and this was way back in 2008 or nine. We were in the middle of the recession and everything else, and it was more for educational, and I learned kind of how to do it and learned how to do valuation. Took some courses, but the idea of representing a business owner, an entrepreneur at that critical stage, getting up every day and seeing, how they got there, understanding the story behind it, not just the financials or the valuations and all that stuff we need to do that make a deal happen. But that to me was the most fun, and being able to convey that story to a buyer, which is really the essence of what we do to help a business get sold. I just love that stuff because it is the dream. The self-made person, who starts and bootstraps a business, how they got to their successes, all the things that they ran into. That's what I get to work with every day, and that's the material. And to me, it's just endlessly fascinating. But so getting that part's not that part was a no-brainer. It's just fun, really exciting work to do, and work with really cool, capable people who have done a lot for their families, their businesses, the economy, and but learning to make money doing it, that was the other thing. Having the fun part wasn't a problem. You can check that box. So,
Yeah.
as long as
Yeah.
we can make a living doing it, and turns out,
Yeah.
we can do okay.
Yeah. Yeah. You can, if you, it's work like any other, but it is rewarding, as you said, because
Yeah, and I think that's really the gist of it too. Is at the end of the day, that selling your business, there's no getting around it. It's hard work. It really
yeah.
is hard work, and I think that we're just there to help with the amount of work that there is to do in it, and the things that you need to do to get yourself ready to sell. You can do it. You can do it by yourself,
Yeah.
but um, you're busy if you're an entrepreneur running a business already. You're probably
Hmm.
already maxed out, and then on top of that, to go and prepare your business to sell it, and there's a learning curve to it as well. So,
Yeah.
but
Yeah.
there's no shortcuts to it at
I
all.
remember the first business transaction I was in had to be, it was in the early 2000s. And I asked the owner of the business, why did you hire somebody to help sell the business? You're as good at this as anybody else. And he said exactly what you just said. He said, I don't have the time, and they do it every day, and I don't anymore.
Mhm.
That's what he
Yeah,
said. He said, so I want them to do it so we can continue building the business.
yeah,
And
and yeah, and I've had several clients over the years, and we've successfully sold their business and helped them do it, that did try it on
mm-hmm,
their own, and as we were going through the process, said it to me. He said it to us, and
yeah,
one of our
yeah,
most recent clients said,
yeah,
"This is why I have you guys here."
yeah, yeah,
It's also there has to be this intermediary. That's kind of another name for a business broker, a business intermediary. To help bridge that gap in stuff, because there is more to it than just hey, here's a product that's for sale. This is the price. There's a lot of back and forth, a lot of risk. It's a big ticket item, and the buyers are sophisticated and ask a lot of tough questions. So you got to prove it to them.
yeah, yeah. That's one of the things we'll talk about here in just a minute. I've got some questions that I was write down, but when when you are in this, what are some of the most common mistakes that you see business owners make, um, as they approach the time to sell their business?
Um, well, there's a number of them, but I think really the biggest one is their expectations, and it's a difficulty because there is not a lot of information in this business about value. For one, these are privately held companies. Owners then rely on their information sources from what they heard at the country club that one of their buddies who owns another machine shop down the street sold, for a multiple of this, and then all that, those kind of things, rather than what a true market value is, and really understanding what the market is, and um an ego, getting, deciding that, I need that, I need the he got a 9x, I need a 9x. And
Hmm.
well, the market's really the decider in this too, and it's okay, it is what it is, but a lot of times the companies don't sell because the buyers have some sort of unrealistic expectation in mind, in the sell. And and I think with Exit Your Way, that's one of the reasons we're different. We're not here to tell you your baby is ugly. What we're here to say, this is what you will get on the market. But if you want to do better than that, we can talk about that too. And
Hmm.
there are ways to prepare and scale your business, and put it in a better position to get the number you kind of are looking for,
Hmm.
if that's what you're going on. But setting lines in the sand and stuff like that is probably the biggest. I mean, and it's nature of the beast. The business owner is a fighter. They are ego driven. It's totally
Hmm.
fine. They're successful, self-made people. They're not used to not getting no for an answer. So,
Hmm.
but it's so that's, if you can manage your way and become more mercenary about it and less emotional. If it doesn't become an ego thing, just it's an investment. Make it more mercenary. I get my number. This is what I expect. This is what I can do with it. You're way ahead of everybody else. So
Mm-hmm. Yeah. So when you're in the last several years, I'm going to sell my business. I'm going to do it 3 to 5 years from now. Are there some things that owner should be thinking about at that point?
Oh, yeah, absolutely. Probably sooner than that. But,
Okay.
and I really think that, any business, if you go basics, fundamentals, go to business school and they, if you go to the bank and they want to see your business plan, a lot of people don't have a business plan written, but they are asking, the basic, one of the major sections of a business plan is your exit, so what is your exit strategy or plan on the business? Because every bit, business is going to face that. And it could be, and we're going to get to an IPO, but this is the most commonly ignored section you'll flip through. I've seen thousands of business plans and I'll open that and it's like half a page. I just want to, I'm going to build this up and sell it to do an IPO.
Yeah.
Right. And this is the question that you're answering is, what's your exit strategy? Don't start thinking about that 2 or 3 years from now. What do you want to do? Where do you want to build this business? How are you going to exit? And there are other ways to exit, but selling's the best way.
Mm-hmm.
And then what are you going to sell it for? And, but if you're 2 or 3 years out, and that's a common thing, and you're looking to sell your business, there are short-term things we can do to help position your company to get significantly more value. And part of that is that buyers are, in terms of valuation, when they're looking at a business to buy, they're really looking at the most recent performance of the company within the last 12 months of when you go to market. So
Mm-hmm.
if you can increase performances, and they're going to base their offers and their multiples off of that performance. So there are things you can do. Some are low bearing fruit that can significantly change things. And also the other aspect of it is that there are things you can do that will, torpedo your deal.
Yeah. I was going to talk about that too, because I think one of the considerations that people should understand, I'd like you to expand on this a little bit, is it's a lot different running your business when you're closer to the business sale than it is when you're starting out in your business or in the middle of your business ownership. So explain some of the things that you shouldn't be doing while you're in that I'm going to sell pretty soon or I am selling kind of phase. Because I think that, like you said, does kill a lot of deals.
Yeah, large capital expenditures, things that, and if you're doing any kind of capital expenditures, and that includes hiring people and that kind of stuff, there's a return on that investment.
Yeah.
Now, it's not to say that you want to cut those kind of, you still want to look at those things because you still have to operate the business like it's a long-term investment, because a buyer too there's another side to that. A buyer will come in and say, you haven't invested enough in the business to maintain it. And we're going to have to do that. So your value goes down. But, but still at the same time, you got to be very careful about that smart investment, hiring, laying off. You just want to know what kind of impact is that going to have on my most recent performance in the last 12 months. And I mean, we've had examples of that too, that the business owner, and he would have made this decision, but he decided to cut loose a underperforming revenue stream, which was, and he laid off the 4 or 5 people and cut that revenue stream because he wasn't making the money quite on that he did on his other revenue streams. And but how that affected the top line was a 10 or 15% decrease in revenue, and that was a and he built, he could cut that revenue stream. His profitability would have improved a little bit, but it's going to take another 15 months to 2 years to climb back up through that. And
Yeah.
difficult to sell the business. And he did the right thing, but at the wrong time.
Yeah, and those kind of decisions can cost millions when you're thinking about it made a few $100,000 or $500,000 difference in my annual income,
Mhm.
but that again is what you're going to be measured against over time, and if that's a 6x 8x multiple, you can be talking millions pretty simply.
Yeah, there's a few $100,000 difference drop in revenue, but that translated into about when you're doing in a multiple, it translated into almost 1.5 million in
Yeah,
valuation drop, and that's
yeah,
just happens instantly. And
yeah,
on the same side of it, though, if you add a revenue stream, a new contract, you get build some backlog or something like that too. You can increase your your
yes,
your value at the exit there. It literally happens that quick. So
yeah.
and when the buyers start seeing that, so
Well, let's talk about that because a lot of people are in the later stages of owning a business are pretty happy with, man, my business has been steady for the last 10 years. I really don't have to worry about it. It just does what it does, and I make this money. Um, how much of a difference when you're looking at two businesses side by side from a able to sell from an buyer interest standpoint is does it make if I've got a business that's just a steady performer or have I got one that's on a growth path and it's just like it's doesn't have to be huge, but it's just a solid growth path.
yeah. Well, I think that's, talk to the buyers about what they're
Hmm.
looking for as well. But I think naturally, most buyers are excited about a company on a growth track. But there are buyers out there, there's just not as many who like, just good returns in a boring business that just makes a consistent, kind of money, not on a growth rate. It's not it's kind of a cash cow. Those are desirable, but there's no, um, you know, uh, equity groups and investor buyers and family funds, and these are kind of in between these are kind of owners that are in between the small medium business market and publicly traded companies. Publicly traded companies run on a growth trajectory. That they are mandated to do that for their shareholders, and they grow by buying other companies and by equity. So naturally, if the equity guys, they're going to want to see growth in there because that's what they're going to flip it over and sell it to a publicly traded company at the end of the day.
That's a good point, and you talk about this a lot, and we talk about it with clients a lot, the buyer perspective. So, can you explain that a little bit, the business buyer perspective and how that's different from the current owner?
Yeah, night and day, and that's the thing too. I think business owners, successful business owners get a lot of phone calls from investor buyers, equity groups. Hey, do you want to sell your business? They get calls from brokers too, and we're usually going to sell that. And they get tired of it. I mean, they're getting spammed with that kind of stuff. There's always people that want to buy their business, but the real question is really, do you want to buy the
Mhm.
business? But go ahead and talk to a few of those guys too. What are you buying? They'll be happy to introduce themselves and say what they've got mandates. They're looking for a certain type of business, certain size. They're going to tell you what kind of management structure they're looking for. In these kind of industries. So that's what they're doing. They're out hunting, looking for those acquisition targets. And I think that the reluctance is the most of the time is that the sellers, the guy on the other part of the line is probably doesn't have what they want in the first place. But find out what it is that you want, because you can, you're building a company, and that can change. You need to be doing that. Otherwise you're going to die. You're just gonna go out of business. So you're building a good business every day. Just build it for what the buyers are looking for.
Yeah. Yeah, and I think that the one thing that, um, too, is that there's going to be a different risk factor for somebody coming in to buy a business. They're going to they're going to invest in a significant amount of capital, which the seller has built up over time, that capital, that value. but a buyer is going to come in and drop of capital in right away.
Yeah, I mean that risk assessment is important. Yes, and buyers, a lot of sellers, a lot of my clients, hey, I want 4 million for my business, and what they don't understand is it does seem like to them it's worth that amount of money. They've got a multiple in mind and that kind of stuff, um, but they aren't paying for that. They've already built equity. They've had that equity. They may have borrowed money from friends and family. They may have had bank loans, but over time, that business has paid all that off. They have equity. They own all the equipment. They own the real estate. There's no debt. But the buyer doesn't. They come in with that revenue stream from that. They have to support that plus all the leverage that they're going to take on to buy the business. And so, it's just like when you started this company 20 years ago, you put in, you borrow 40 or 50,000 bucks from your parents and you started your business and you've been building it all this time. Would you now buy this business and borrow, 4 million and have to, and those are, so the business has to, the buyers at risk that's what they're facing. They're coming in with zero equity and then they have to build that out. And the business has to have enough cash flow to support that because it's the cost of that capital is a significant expense.
Yeah. And I think you explained it well because they, and this is why I think people that are selling a business really need to put themselves in the shoes of a buyer to be able to go, okay, if I was sitting here today, just like you said, just use the example you said, would I pay $4 million for my business, which is going to be
would I go into debt $4 million?
Yeah, exactly. Am I going to go into debt $4 million for this and say because typically everyone wants to use some debt to buy a business, right? So if I'm going to just do a simple thing, I'm going to do $4 million. I'm going to pay you. I'm going to give you. I'm going to get a loan from the bank. I'm going to get an SBA loan because it's under $5 million. I'm going to put 400,000 into the business, cash of my own, and I'm going to get a loan for $3.6 million. And that loan of $3.6 million is just say it's $30,000 a month that I have to pay on that loan for the next 10 years. Would I do that?
Yeah. And we do. And this is something we ask our clients too. Would you buy it?
Yeah.
Would you take on this loan and do you this business better than anybody? Can you support that payment for the next 5 or 10 years and also pay yourself because know in a lot of these cases these are owner operated businesses and you'll be working 80 hours a week, so you should get at least market value for your CEO or running president of the company. And then of course this is the calculation that you can do to get a price sanity check and to kind of see is there enough money left over then to reinvest in the business over time? Because you can't just take cash out and not back invest in capital expenses. Otherwise, it'll become a very tired business quick. And then after that, have you on that track? Have you built equity in the say in the next 5 years? How much have you paid off? How much equity would you have after 5 years? If it's a reasonable amount, then you're in the right price range.
Yeah. Yep. Good stuff. So one of the things that I know that happens a lot is people come to us that have I want to say a small single entrepreneur, solopreneur kind of business, and they're thinking about selling that business. And in those cases, it can be that it's better for them to try to sell their business themselves. Simply because of the size, the cost to do it with using a broker or somebody else to help them sell their business. Can you talk about that a little bit? And I know as you get larger, it's very difficult to do, but in the small businesses, there's a lot of things I think could be helpful here to tell people. about that?
Yeah, I think it has to do with deal size. I mean, there are business brokers and real estate agents that will kind of dabble in trying to broker it, and all they're really doing is put a listing together and put it on the market. I don't think there's a lot of value. The fees are pretty high. Um, I'm I'm always I get calls, and I know I can't help it if you're under, if you only have like 600,000 in revenue and you're taking home about 80,000 a year. My fees, to sell that kind of business. Yeah, there's a market. You can sell it. It's probably buying a job for somebody, but there are people who will do that. You're just not going to get a lot of money for it. And our fees and most broker fees will eat up a lot of what you'll take home
Yeah.
from. And at the end of the day, I think at that level, it's not really rocket science to you can, like I said, anybody can do this, right? But if you're running, a company with 30 or 40 employees and everything else, like we said before, you got a business to run and you need help navigating this, and you're going to have multiple buyers. But you have to look for more creative ways, but and maybe use some consulting. I recommend just pay the fees, for some good consultants to do evaluation, understand what a reasonable price is, and then work with the bank to get it funded, and put an ad out and
Yeah.
talking to people, and so that's we would prefer to help give them a sort of a do it your way program, and so I'm happy to tell you and share our experience, and this is how you do it. But I think that's even a better deal than probably referring them to a broker somewhere else.
Mhm. Mhm. Yeah, because at a certain point, it's one of these things where you should really consider doing it yourself,
Yeah,
because of the total amount that you'll give away with the sale of a business, for commissions and things like
yeah,
that for someone to help you. It's you really should take that step to try to sell it yourself.
yeah. I mean, even and uh, there's uh, there is a market, and there's
Yep.
small businesses like that, owner operated businesses are, and there's a lot of them.
Mhm.
Uh, are available, but there's, you know, uh, one ways with that too is to, looking at your exit too is to make sure you sell at the right time, not because something's going wrong,
Yeah.
not because you're burned out. Ask yourself the hard questions, right? Because then you're just going to waste your time and try and sell a business because there's a reason. If you're burned out, you got to fix the burnout
Yeah.
and sell the business when it's, you got to put some elbow grease on it and sell the business when it's doing better. And that's
Yeah, you're doing well.
that's a real trick. And one of the reasons that small businesses like that too have a very low sell rate. Only about 30% of those businesses that go to market actually sell. And you'll find brokers who they won't take your money. They work on commission, but they will put the listing up, and then they're just hoping to get, it's a 3 in 10 chance.
Yeah.
Yeah,
Yep. Yep, and I think that's where it's for helping those people with DIY. There's places to, um, there are places where they can list businesses. There's places that can help them prepare. There's places that offer some consulting, even if they wanted to get some paid advice to go, okay, should I really consider this? And like you said, it's not rocket science.
work
In some
is
cases,
what
it's
it is.
work. It's
Yeah,
but there's times when it is something you just have to do
yeah,
because and now let's look at the other side of this too. There's sometimes if you're in a solopreneur business that you should really consider, do I want to take the time and put the effort in to sell it, or do I want to run it a little bit longer and do an orderly closure?
yeah. Well, you got to meet some goals there, and then again, that is part of the consulting side of it. Is get with somebody who can help you understand. Is it worth it to do that, right? So, because you're investing your time and maybe some capital into growing the business up to a certain level, and when you get to that level, what's it going to get you? So you have to look
Yeah.
at that aspect of it too. So, but at
Yep.
a certain point, those difficult, it's a threshold, and those, if there's not enough cash flow to support um, the owner's time working in the business, then some more, then you're just really not there. But you
Yeah.
can get creative. Um, there's other ways to disperse, but you don't need a broker's help to sell a
Yeah.
business opportunity. You can unwind, sell your assets. You can sell your book of customers. You won't get a lot
Yeah.
for it, but and maybe you'd have to analyze it to see if that might be the better route than putting a few more years in it.
Yeah.
Um, yeah, and also a lot of those businesses too. You don't need a broker to do this to groom a successor. Possibly an employee or even a competitor or somebody to bring in, but those kind of situations too. It's not getting a lot of money, but you're going to have to help them financially, which is
Hmm.
in the term of agreeable loan and that kind of stuff. So that's another way you can get a little more value out of it, but that takes more
Hmm.
time and there's risk
Yep.
involved in that too. So, but
Yep. Yep. Well, we have Gabe Leal has asked the question. He said, first of all, he said hello. Said hello, Gabe. But have you dealt with selling any types of businesses operating the web through your blockchain? I'm going to say no to that.
yeah, we
Yeah.
have, yeah,
It's interesting. It's interesting though, because there are some of these businesses that are starting to become established, profitable, and things like that. Because um, we do, however, again, this week we got contacted by two different business owners that have ideas or patents or something pre-revenue kind of things. Um,
yeah.
and we, that's just not something that,
Yeah,
that
I
we,
mean, yeah, and I think I think that we're in a different space where we operate with going concerns and businesses. Not that we couldn't be, we have worked with businesses in the fintech industry and the financial
Mhm.
technology and those kind of things, but established revenue streams. But there, the angel market, you're looking at where the capital is coming from. Angel investors um, are out there, are very active in those kind of companies, and even they're interested in providing capital or purchasing equity or buying
Mhm.
those businesses if there's those are very high risk, even if they're losing money.
Yeah, if
There is
there's
no
good
capital
upside,
at any time. So,
if they got good technology or good upside potential, yes.
yeah. And I
Yeah.
do. I think we were contacted today by somebody in that situation. They just hadn't got any revenue yet, but we don't really work there. But there are
Yeah.
people that do. And then their goal is to sell the company to a venture capital firm or something like that. And
Yep.
venture capital firms are looking to sell to private equity. You're moving up the food chain as you go
Yeah.
along. Private equity is looking to sell to publicly traded companies and strategics.
Yeah.
That's sort of the lay of the land.
Yep. The I got I wrote down some questions actually. I was actually preparing for this. Usually I don't do this much, but um a couple things. Why are accounting records so important to a business sale?
Because everybody does them different. The difference between and a lot of people, I think, with small medium businesses, don't even ever look at them. Understand as a business owner, please go out and at least take a couple courses so you know your way around a balance sheet and an income statement and cash flow, the basic fundamentals. But they run their businesses off their income statements. It's really just profit and loss about what's happening most recently. When a buyer comes in, this is the big difference between large companies and publicly traded companies and small medium businesses. It's lifestyle, business owners, publicly held. There's personal expenses being run through there. They are not required to have GAAP approved reviewed financials or accounting things, which is fine. That's all expensive, but if you get the right people in there to it shouldn't cost you a lot of money to, so that when somebody comes in to buy your business and open it up, it looks familiar, it looks standard. It doesn't have to be GAAP, it doesn't have to be audited, but operating expenses need to be in the operating expenses part. The financial activities need to be below the line. These are common things. The cost of goods need to be
Mhm.
calculated correctly. The labor needs to be allocated right. And so and then we have to be able to have a good clean records and and a good reporting mechanisms that are timely, and processes in place so that that people follow on closing the books and records and not going back and changing things. And we found errors that happened 3 or 4 years ago that built up, and made significant changes to the equity of the balance sheet. That took almost forensic kind of level accounting work, to go and unwind all that and redo it so we could sell the company. And that puts you back, another month. Not to mention the fact that you probably are giving away money to the IRS, not unnecessarily. So all these things.
Yeah. Those records of just keeping them reasonable, keeping them well organized will save you a lot of headache.
And accessible. Yeah. And that's one of the things today too, is, there are still people doing, the books are in a binder in the desk, or that's an extreme example, but, or they're using some other kind of accounting file that, is only in one location. Hey, that's a big risk too, because if that computer, there's a fire or something, I mean, that's why these things are cloud drive accessible from everywhere. They have redundancies, and it's important to keep that stuff up.
Yep. Good. Well, Andrew, I sure appreciate you stopping by today, because Lord knows we've had a few inquiries in the last month or so, and it's good to be able to share some information with people, I think, and help them, because as many people as we talk to, that you there's always more questions.
Yeah. What recession? We've been busy as heck.
Yeah. Exactly. Well, thanks for taking some time today, Andrew. Appreciate being able to sit here. Gabe, thanks for the questions. Everybody else that was listening and not asking questions, but if you got some questions, go ahead and DM myself, Andrew, or drop a comment in the post here, and we'll get them answered. We will be talking to you again next week with the Faces of Business, and we'll talk soon. Thanks, everyone.
Bye-bye.
Bye.